We've seen December inflation figures coming out of Botswana. It's at 9.2%, but overall for 2011, inflation is more manageable at 8.5%. But this is still a lot higher than what the inflation target is. For you, is this a worrying picture?
Well, I'm not too worried for now. I think we'll have to carefully look at the factors that drove inflation. The average inflation is still above the inflation objective of the Bank of Botswana, but it's largely because of factors that we can explain. These are factors related to high fuel prices, food prices, and also administered prices. I also think that the Bank of Botswana also carefully look at underlying inflation. So if we strip out these volatile exogenous factors, the picture looks slightly better. The underlying inflation, in other words, inflation excluding fuel prices and food prices, is slightly higher. It's still out of the inflation objective of Bank of Botswana, but it's a bit closer. And I think also Bank of Botswana will also look at the outlook for inflation and some of the factors that have put this upward pressure on inflation. I think those factors, they look better going forward.
All right, you talk about administered costs. That's been a major issue. The rise in electricity tariffs in Botswana, the rise that most countries have had to cope with, the rise of energy costs and fuel costs. But there's also been a rise in VAT in the last year and also higher controlled prices. So effectively, how are authorities going to deal with the situation?
Well, I think some of these factors like the VAT, that was a once-off adjustment. So I think in the next round of inflation, that correction will happen. So there's not much that they can do about it. Again, also on fuel prices and food prices, not much they can do about it. We'll just have to also wait and look what will happen to the global economic outlook. The good thing is that at an international level, we are seeing that food prices have started to stabilize and also in some instances coming down a bit. But it's always an uncertainty. You know, there could be another drought in one of the key food-producing countries in the world, and that will put upward pressure. So I think it's not much that they can do about it. Small economies like Botswana and also Namibia have opted to anchor prices through more fixed currency exchange rate regimes. So that to some extent enable them to import more stable prices from key trading partners.
I'm glad you mentioned the exchange rate, because one of the questions that our producers had earlier on is, how is it that the pula remains strong despite everything that this economy has had to suffer? Fixed exchange rate is one element, but surely then with a stronger currency, they should be able to cope with the cost of imports.
Well, there are some movements in the exchange rate of the pula. We have also seen some bit of depreciation as of late. Of course, Botswana is a crawling peg that moves within certain bands. So those bands are very narrow for now. But the other thing also is, you know, Botswana is a very well-managed economy. It still has, on the African continent, one of the highest reserve levels. Certainly in terms of import coverage, it's the highest. If you also look at other fundamentals of Botswana, it's still quite strong. The fiscal position is strong. The diamond sector has been performing very well as of recent. So I think overall it's a very well-managed economy still.
Let's go back to the inflation picture here, and there's a bit of a discrepancy. Urban inflation seems to be coming down slightly, but rural inflation seems to be going up. Explain this discrepancy.
I think this is normal in most setups, you know, that if you look at the price mechanism, the price discovery mechanism, it's often better in urban areas where there's more competition. In rural areas, there are fewer outlets, and the price discovery mechanism is slightly weaker. But largely, you know, the inflation is more or less the same. If we look at the direction, it's really by 0.1 or 0.2% difference. So it still reflects the overall picture of inflation in Botswana.
All right. Available options for the Bank of Botswana?
I think, you know, at this point in time, there's not much that they can do. Mind you, we also find ourselves still in the middle of this economic crisis. And higher inflation is not only something that's to Botswana, confined to Botswana, but we are struggling all over in the world with it. And one of the key concerns of the monetary authorities is also to look at economic growth. I think certainly one of the options is to tighten policy further, but will it work? If you look at the factors that have been driving inflation, it's not really coming from domestic demand so much. There are demand pressures, but the overriding factors is factors that the bank cannot control. But I think, later on they will have to consider tightening monetary policy. At this point in time, I think it would still be premature.
Talking about tightening monetary policy, we've just seen South Africa's Reserve Bank decide to keep interest rates unchanged at 5.5%. And there is a sense that, to an extent, Botswana and Namibia track central bank movements or decisions that are taken in South Africa. Certainly, Botswana's inflation rate is influenced to some extent by South Africa's inflation picture. Inflation here, 6.1%. Inflation for you, or for Botswana, 9.2% in December. How are the two economies interlinked? Because South Africa is Botswana's largest trading partner. How do the rising of prices in South Africa have a bearing on the rising of prices in Botswana? And what can the authorities do to mitigate that?
I think you are very right that inflation is so closely linked, because South Africa is the main trading partner of Botswana. Especially most of the consumable goods are imported from South Africa. So in this context, where the authorities have a bit of limited scope on the side of monetary policy, it becomes very important for South Africa to fight inflation then. Because the hope is that if there's stable prices in South Africa, countries like Namibia and Botswana will be able to benefit from those stable prices through imported goods. So what countries like Botswana and Namibia can do is to manage some of the domestic factors that impact on inflation. But otherwise, the best option is to align policy as closely as possible to South Africa. What we have seen in the case of South Africa today, they opted not to increase the repo rate, despite inflation on the uptrend, despite the fact that inflation will be above the upper limit of the inflation target range. So I think it really reflects, the concern of authorities that, the growth objective is very important. And in this current environment, to have tighter policies, it will really choke economies. Right. I think that will be a major factor.